sent to us. Let's get straight into it. Julia, what did you make of the session to finish the week?
Well, it's a strange kind of day. The market in the end down by 0.1%, but once again extremely light volumes, around $4 billion worth of stock being traded. And that means for the week, not one day have we surpassed that $5 billion mark, and we haven't seen that since early July. So anemic volumes all week. If we have a look at the market, down about 1.4%, 1.5% for the week. And if we have a look at what happened on the market today, well, we saw some of the underperformers of the year fighting back. Stocks like David Jones, Cochlear, up by 4.6%. But in the end, the defensive areas being sold off. We saw consumer staples as well as the telecom sector ending in the red. Altogether, the market's also watching that commodity space. We saw a first quarterly production report coming through from Woodside Petroleum. That was down by 0.7%. But that massive commodities tumble overnight didn't have a huge impact in terms of the Australian market. There was talk that French banks could limit credit lines for commodity or trades. And if we have a look at the commodity space, we saw some big moves. Copper prices down by 6.6% in London, down by 5.2% in New York. But altogether, the materials sector actually finishing in the black. So altogether, a bit of a strange day on the Australian market in the sense that traders are really just treading water ahead of that EU summit.
Yeah, particularly I suppose this, and John had it in his morning note, this idea of any opportunity, the markets will sort of look at some news as being glass half full, this FOMO, if you like, this fear of missing out. So not huge buying, but some sort of buying on the hope of something happening.
We haven't seen too much buying on the hopes of things happening. In fact, a lot of scepticism around this EU summit, especially seeing that they have now scheduled a second meeting on the 26th of October on the Wednesday and hoping for a plan by then. So really, once again, we haven't seen anything concrete come out, and I guess the headlines will be watched over the weekend over that summit on the 23rd of October. But also, I think the market's going to be watching the US. There seems to be a growing feeling that perhaps we're going to see QE3 coming out of the US. A lot of talk about perhaps some large-scale mortgage-backed security purchases by the Federal Reserve. We saw a Wall Street Journal coming out today, an article out today, and this seems to be because of a speech made by one of the Federal Reserve governors, Daniel Torello, and he was talking about mortgage-backed securities. A large-scale plan should be once again top of the agenda, and it does look like markets once again picking up on that. So it could be an interesting session in the US tonight. We'll also be watching once again the headlines coming out of Europe, but no definite plan expected to be announced this weekend. So it looks like Wednesday is going to be D-Day in terms of market expectations for a plan out of Europe.
On Woodside as a stock, particularly at these levels at the moment, closing on $33.38. A lot of people, when they talk about, you know, truly global assets held by Australian companies, often mention Woodside, the big diversified energy player, but it is a long, long way from its highs and more suffering from a little bit of negative sentiment.
I think it is suffering from short-term negative sentiment. If you have a look at the projects that Woodside Petroleum will be rolling out over the next 5 years, I mean, the market's not even putting a value on some of these projects. So in terms of valuations, Woodside looking very cheap. And one of the things that has been holding back the share price is the Royal Dutch Shell stake. They did own 34%. 10% was sold off last year, December 2010, and now they're still looking to offload 24%. So that's helping to keep the share price down. But if we have a look at Woodside Petroleum, this production update pretty much in line with their full-year forecast, and their full-year forecast for between 62 to 64 million barrels of oil equivalent. Now that is down from the previous year, 70 million barrels of oil equivalent, and if we have a look at this quarterly output number, down by 12% at 16.1 million barrels of oil equivalent. So altogether, things seem to be tracking really well, but really where the uplift from Woodside Petroleum is going to come in terms of production is next year, when we do see Pluto T1 hit production, and we should see that in March, and that's going to give an earnings per share uplift of about 39% in 2012, and then from 2013 onwards that should give an uplift of about 25%, and that means production will also increase to about 90 million barrels of oil equivalent in 2012. So really, if you look forward for Woodside Petroleum, the growth profile of this company is absolutely phenomenal, but it's short-term sentiment really hitting Woodside Petroleum. I guess a lot of concern around global growth and also the consumption of oil and oil prices going forward.